Hello again, everyone. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials, look at one of the key indicators I track every day, the put-to-call ratio out of the Chicago Board of Options Exchange, and then we're going to look at gold. I haven't looked at that in several weeks. So I want to start off, the Dow was actually up 92 points on Thursday. Thursday was the last day of trading here in the United States. We were closed for the 4th of July. And by the way, happy 4th of July to everyone in the United States celebrating the 4th of July, Independence Day. All right, so it was up 92 points, but at one point the Dow was up 469 points and it gave it almost all back. Now here's a weekly view. It was up 811.81, but it's really interesting in here. Let me get rid of the crosshairs for a second. We had basically a tightened range. We traded inside the previous week's range, and that week traded inside the previous week before that. The other thing I'm noticing is this big reversal candle to the downside here. You know, the week before last, we closed below that low. Now, we haven't gotten any follow through to the downside, but it's going to be really interesting to see if we do as we come into the next week or two. Now, the other thing I want to point out is if you look at this January 2018 high, okay, remember this was like the peak of all this just exceptional bullishness that was going on back here in the fall of 2017, and into the VIX was extremely low. I think it even got to like single digits or something. I can't remember exactly. But if you then take a line across the high of this January 2018 close, we closed on this last week well below that. Okay, the close was for January 2018 was 26,616.71. We closed 25,827. It's right here, 25,827.36. The other thing I've noticed in here, this big reversal candle, what have we done in the last 3 weeks? We've basically been up about 200 points. This has been a very, very choppy session in terms of what's been going on in here. All right, so now I want to take a look at the daily charts. So what I've got highlighted here with these squares, there's 5 days up here in January where the put-to-call ratio, the equity put-to-call ratio, a 10-day moving average, got to an extreme. And then here in June, it got to even a longer extreme, even more of an extreme. And here is the peak on June 8th. And let me pull up the put-to-call ratio so you can see what I'm talking about. Okay, so here's June 8th. See this 0.38? That is like the lowest reading in many years. And we didn't, with all that topping process that I just talked about or showed here on the weekly, all of this that we've been going on, we never got a reading in all of this as low as what we just got on June 8th in terms of this peak. I think it's the peak of this counter trend move. We'll see if we continue to break down in here. Let me bring the put to call ratios back up. So what I'm looking at, this square right here, that's where the 10-day moving average is below 0.50. And I start coloring it a darker red color to talk about the extreme in terms of what's going on. And you can see, you know, the bullish extreme, the bullish sentiment that's been going on. And if you go back up to the top to February, January, February, here's what we had in January. You know, we only had 5 days in here, right in here. 5 days of extreme readings, and we had 8 days of extreme reading here with this 1 day very, very extreme reading of 0.38. So I think there's a decent chance that we just saw the peak in the bullish sentiment, and we'll see if we start to roll over and break down and then see what happens to the sentiment. All right, so that is the picture there. Now let's drill down and take a look at the hourly view. I actually use 65 minutes for my hourly view. And so here is that June 8th peak right here. Okay, so here's what's going on. I think we had 5-wave move down for minor wave 1. And I've got it labeled as minor wave 1, minor 2, and that we're working our way down in here. You know, we've struggled to take out this low yet. We haven't taken out this June 15th low. The alternate count in here is that this is some kind kind of a bigger, like an A, B, C corrective move. And that's what I've got up here as an alternate. And we'll see. I think there's a pretty good chance too that we topped out on Thursday. I mean, look at this first hour of the day here on Thursday. And then here's the last hour of the day. We got this big pop, went all the way up where the Dow was up 469 points. And then the last hour of the day, we come back and practically gave it all back. I really thought we were going to go negative, but then it just kind of held on. All right, so this is the picture. Either we're about to break down in minute wave 3 of the third minor wave, or we're just starting the third minor wave. So it's I'm still looking for this to head down. There's always the possibility that maybe this isn't finished just yet, but I do like the way this RSI has broken this trend line with this last move that happened here on Thursday. And a lot of times when you get a trend line break like this on the RSI, it's kind of a leading, I guess leading indicator, you can call it that, of the price action that's about to happen. So we'll see what happens here this coming week. Okay, let's take a look at gold. I want to look at gold. I haven't looked at it in several weeks. I want to start off here with this, just the traditional moving averages and the indicators I've got on here. The thing I've noticed is if you look at from this day right here, which is April 14th, we've really been in just a sideways trading range, okay, all the way over through June 19th, and actually finally got a breakout here on June 22nd. So when I look at that, and I see this kind of a range, one way to project, where this is going to go is you say, well, okay, we break out of this range, it'll go the width of that range higher. Okay, well, that projects up here to 172. Okay, so that's just one way of looking at this. Look how long, I mean, the close right here on April 14th, 162.68, and then the close right over here on June 18th, 162.24, literally down like 40 cents in 2 months. I mean, it just didn't do anything, and now we've broken out, I believe. Now, how much further? I think this is really about all we're going to get out of this, and I'm looking at it from an Elliott Wave perspective, that, we had we really wrestled with this. This was very choppy, and it was a struggle, honestly, and it could have gone either way, but right now, I believe that we still have more to go, and I've got 171.41, but, really, let's just say 172 as a ballpark, okay? I think I'm looking for a 5-wave move up into here to complete wave C. I don't think we're complete yet, okay? So I'm looking for this to continue pushing. So when I look in here, and then I look over at, let's take a look at the weekly view. I think all I got to do is do this, okay? This is the bigger picture on GLD. So this is why I believe that we're getting ready to head down once we complete the C wave, because I believe we had 5 waves down for A, and we're doing a big zigzag. When we get 5 waves, we're looking for 3 waves, and I think we got the 3 waves in here, a W, a triangle for X, sideways, and then a zigzag back up here for Y. Okay, that would complete B. That would imply that you have one more move, you have another leg coming down, a C wave, to complete the whole corrective process. So that's what I'm watching for. So once we push up to around 172, I'm going to be looking to see, do we start to break down and roll over? Okay, so that is the picture on GLD. Okay, that's it for this weekend. If you felt like the video was helpful, give it the thumbs up. And if you're not a subscriber to the channel, hit the subscribe button. And if you'd like to have more of this kind of information, we look at this, all of these things every day over on my website at joehenches.net. And head on over there and check it out. All right, everyone, have a great rest of the weekend, and we'll talk to you on the next video.